Hold on tight, folks, because Bitcoin is on a roller coaster ride. The cryptocurrency market is experiencing major turbulence, and Bitcoin, the poster child for digital assets, is feeling the heat. Prices have plummeted, leaving investors both seasoned and new feeling a bit queasy. Should you be hitting the panic button, or is this just another bump in the road for the world's most famous cryptocurrency? The recent Bitcoin crash has sent shockwaves through the financial world, leaving many wondering if the digital gold's shine is finally fading. Remember, volatility is nothing new in the crypto world. Bitcoin is known for its wild price swings, and this recent downturn is a stark reminder of the risks involved. However, before you liquidate your holdings and swear off crypto forever, let's take a deep breath and examine the factors at play. So, what exactly is driving this Bitcoin downturn? Well, it's a perfect storm of factors converging at the worst possible time. First, we've got governments around the world starting to flex their regulatory muscles. Increased scrutiny from regulators, particularly in the United States, is creating uncertainty in the market. Second, we're seeing a wave of forced liquidations. When Bitcoin prices drop, investors who bought in with leverage are often forced to sell their holdings to cover their losses. This creates a domino effect, pushing prices even lower. And finally, let's not forget about the whales, those enigmatic entities holding massive amounts of Bitcoin. When whales decide to sell a portion of their holdings, it can send ripples throughout the entire market. Despite the recent carnage in the crypto market, many prominent voices in the financial world remain optimistic about Bitcoin's future. Michael Saylor, CEO of MicroStrategy and a staunch Bitcoin advocate, views the current dip as a buying opportunity. Bitcoin is the most disruptive technology since the internet, Saylor recently stated. Volatility is the price you pay for performance. Cathie Wood, CEO of ARK Invest and another prominent voice in the world of finance, echoes Saylor's sentiments. Wood believes that Bitcoin's long-term potential remains intact, despite short-term fluctuations. "We are very positive on Bitcoin, and we think it's going to be a very big category winner," Wood declared in a recent interview. Okay, so we've heard from the experts, but what does this all mean for you, the everyday investor? Well, the answer depends on your investment strategy and risk tolerance. If you're a long-term holder who believes in the underlying value of Bitcoin, this dip might present a tempting buying opportunity. Remember, dollar-cost averaging or investing a fixed amount at regular intervals can be a smart way to navigate volatile markets. On the other hand, if you're a short-term trader looking for quick profits, this market turbulence might be a sign to proceed with caution. Trying to time the market perfectly is incredibly difficult, and even seasoned traders can get burned. Remember, never invest more than you can afford to lose. Looking back at Bitcoin's history, one thing becomes clear. This isn't the first time the cryptocurrency has faced a major downturn. In fact, Bitcoin has experienced several dramatic crashes since its inception. And yet, time and time again, it has bounced back, reaching new all-time highs. Remember the 2017 crash? Or the dip in early 2021? These events tested the mettle of investors, but those who held on were handsomely rewarded. These previous dips turned out to be incredible buying opportunities for those brave enough to seize the moment. While past performance is no guarantee of future results, Bitcoin's resilience in the face of adversity is certainly something to consider. The recent Bitcoin crash is undoubtedly unsettling, but it's essential to keep a cool head and not let fear dictate your investment decisions. Remember, investing is a marathon, not a sprint. Focus on your long-term goals, and don't get caught up in the short-term noise. The crypto market is still evolving, and volatility is par for the course. Do your research, understand your risk tolerance, and make informed decisions that align with your financial goals. And hey, if you're still feeling unsure, there's no shame in seeking advice from a qualified financial advisor. Stay informed, stay calm, and remember, fortune favors the bold.